When we are talking about support and resistance, we are talking about a tool which is important to every trader. Almost every trader uses it. The drawing you are seeing on my screen, this is an old way of drawing support and resistance. So I'm going to show you a new way of drawing support and resistance to help you in your trading. If you are new into this channel, make sure to subscribe and let's start. So let us take a quick look on what we are going to learn on this topic of support and resistance. Number one, we are going to start what is support and resistance. Number two, we are going to talk about types of support and resistance. Under types, we have horizontal lines, trend lines, dynamic levels, and psychological levels, or you can call them round numbers. Okay. Then number three, we're going to talk about how to draw support and resistance. Rather than we will be moving from this to a clean support and resistance level. What are support and resistance? Simple. Support and resistance are basic, only basic, which means you must start with support and resistance, but powerful concepts in Forex trading. They help you understand where prices are likely to stop or to reverse. So in familiarity, we're having a base here, which is like a floor, and then we're having up here, which is like a ceiling. This ceiling is what is called a resistance, while this floor is what is called a support. As you can see in this chart, you can see that when price reach the support area, it rises up to resistance area, then comes down to support, then you buy at support, then you sell at resistance, then price comes to support, then you buy to resistance. That's how support and resistance work, but I will explain more deeper than what you see in this picture. So sometimes support and resistance is not what you see. Example, you're having a market structure. Remember, market structure consists of swing points, swing highs and swing lows. So this is a swing high, swing low, swing high, and swing low. Remember, price was moving up. It reached a resistance. Moving down, it find a support. When price grab this resistance will become a support. Okay. Then price going up to create another resistance. Okay. Price come here down to create support. When this resistance is grabbed, it will become a support. Okay. Maybe price can come here and then come to this resistance as a support. You can see this resistance is now as a support. The same way in a downtrend, price was coming here, it found a support there, then resistance there, then it grabbed this support. This was a support area. After price grabbed this support, we are now calling it a resistance area because price can retrace up to there to retest that resistance. Then we're having support here. Here is a support, resistance. When price come for that support, it will change to resistance. So forth and so forth. So let us now start with the support. What is a support? Support is a price level where a downtrend is expected to pause due to increased buying pressure. Let's say we're having something like this. We are on a downtrend. Price making lower highs and lower lows. Then the selling post. Okay, post. And then increased buying pressure was seen in the market, which means that this area was an area of support. Buyers see prices cheap and start buying. Here around support, buyers, even if price comes down again, buyers will see this area as a cheap price to start buying. Okay, sellers become less willing to sell at lower prices. There are no more sellers around this support area, and price often bounces upward from support. If price reach to this support area, price bounces upward. Think of support as a floor beneath price. Let us call this support as a floor, the floor you are stepping on right now. That's what a support is. Now, let us look at resistance. So resistance is the opposite of support. Resistance is a price level where an uptrend is expected to pause due to increased selling pressure. We are talking about an uptrend. Uptrend is like this: higher highs and higher lows, higher highs and higher lows. Then it reached maybe a point of resistance there. Okay. Then price paused and selling pressure came and sellers entered the market. Then price came again to this level of resistance. Then price did what? Selling pressure came into the market and it pushed down. So the area around here is support and the area around here is resistance. Okay. Sellers see the prices expensive and start selling. Okay. If the sellers come here, start selling. If sellers come here, they see the prices expensive and they start doing what? Selling to gain more profit. Price often moves downward from resistance. If price reach support, it goes up to a point of resistance, then it comes down. Think of resistance as a ceiling above price. If you look up, let's say you are in a room right now, you look up, you will see your ceiling. If you rise or if you jump, you won't pass over that ceiling, okay? Because there will be a resistance. If you jump above here, you won't jump over that ceiling. That is a resistance. And support, you can't go more low than a support of your room, which is a low. So we are going to look at types of support and resistance. And the first one that comes in everyone's mind that everyone know is horizontal levels. Horizontal levels are simply taking your line, drawing it like this. Horizontal, just like that. Horizontal levels. But let us dive deeper. Horizontal levels are support and resistance. So horizontal support and resistance levels are the most common. The way I told you that traders identify a key price zone on a chart. They are drawn as straight horizontal lines like this. Straight horizontal lines, that's as a resistance, and straight horizontal line as a support, connecting previous swing highs and swing lows. Example like this: swing high, swing low, swing high, swing low, swing high, then swing low. You can draw here and you can draw here. You can see I've drawn horizontal line. So this one was a resistance. Price came, take out the resistance to become a support. Then price came and retested the support area. Going up, you can see this was a resistance. Then price grabbed that resistance to go up. Then this area became a quick support. Let's start with horizontal support. Horizontal support level is formed when price repeatedly finds buyers at the same area and bounces upwards like this. Okay, we're having a price chart like this. If we take our tool, our line, draw it from this to that, you can see that we have drawn a horizontal line and it acts as a horizontal support. Price went up, came down this here, then went up, came down, then continue going up. That's all. That's a horizontal support level. So each time the price came to this level, buyers rushed to buy even when it was not a big buy. Price rushed to buy around here. Okay. Another way that you can draw that support, you can look for swing points. Either the price was moving on a high, then created a low, then a high, then a low. If you see price going to create a low, you mark the obvious resistance. Where was the resistance? Around here. This is where the price reached further. Here. Then price grab that resistance. After price has grabbed the resistance, we can mark this high as our support, which price can come like this and continue moving up. Okay, before price comes again to retest the support zone. Okay, then price continue moving up. Okay, that's an horizontal support. While Horizontal resistance is the opposite of horizontal support. A horizontal resistance is a level formed when price repeatedly finds sellers at the same area and moves downwards. Okay? Example, let's take a horizontal ray, mark it from there. You can see some people, they choose to mark it like this, or they can mark it just like this. Bigger one, they mark it with bigger one, but I like marking it this way so it can become simpler. Let's draw support around here. Price came from this area of support to resistance. We tested the support, support again, then resistance, then support, then resistance, resistance, resistance. Price is resisting. Then finally, price break the resistance level. That's a horizontal resistance level. The next type of support and resistance is a trend lines, which are drawn diagonal. Example you can see on this chart is a uptrend. Okay, you take your arrow, you draw this diagonally. Remember, there's horizontal support and resistance, and then there's diagonal, which are trend lines. Okay, so on this type, you can see that this one is a support, and the upper one is a resistance. Okay, that's a trend line, support and resistance. Okay, so trend lines and support and resistance, we can say that trend lines are dynamic support and resistance levels that move with the market trend, unlike horizontal levels, which are consolidation. Okay, consolidation are like this. Market was consolidating, and then if we draw horizontal levels, you can see the market was reacting around this support and resistance. But this trend lines are support and resistance, we can see that they are moving within a trending market. Okay, example, we are having an uptrend. Okay, if you take your diagonal line, you draw it from those swings low and swing size, you can be having your support and resistance around there. Simple as that. Let us now look at the third one, which are dynamic levels. What are dynamic level trend lines? These are the use of indicators such as moving average to find support and resistance. So I'm going to only look at moving average to find support and resistance. When you come to indicators up here, look for moving average. Let us use the second one. Look for moving average exponential. EMA, moving average exponential. You can come to a chart. Let's set it to come a little thicker. Let's set the length to be around 35. Style, let's make it more thick. Thickness, let be like that. Then you press OK. Now, as you can see here, the price has created support, support, and support. Okay. Then let us now look at resistance. The first resistance is around here. Resistance, the second one resistance, and then the third one resistance. Then created support around here, on and on. So EMA can help you find the support and resistance without pressing, but I don't encourage this one. Let us now look at the last one, psychological levels. So guys, I want you to be keen around these psychological levels of support and resistance, because this one is the most important thing of all. So psychological levels of support and resistance, what are them? Okay, these psychological levels are round numbers where traders naturally place buy and sell orders. These levels often act as strong support and resistance because many market participants focus on them. Let us now focus on gold. I love using them on gold because one reason, these psychological numbers, let's take 20, 50, 80, and 100. This can become 0, 0, okay, 100 or 0, 0. So we are going on a live chat to see how you can use these psychological levels to make your trading more easy, okay? So this is SHA USD. What's the current price of SHA USD? 4,100 per ounce, okay? Okay, let me go to higher time frame, like monthly time frame. We want to mark 5,600. If you mark 5,600, you can see that price reacted around that level, okay? And it is not once. In future, the price will come and react around 5,600. Let us look at this level. Let's mark 5,350. 4,350. If you mark this 4,350, you can see price was doing reaction around that level. Here, let's zoom here. Then there was some certain activities here around here. Price grab down, then it came around here. You can see this red candle. It acts exactly at that support level. Okay, it acted as a support level, which pushed the price more higher. Then after price has grabbed that support level, it becomes a resistance. You can see price came and react around that level. Let us look at this level. Which level is this one? This one. Let us mark 4,800. Yeah, this 4,800 is this one. As you can also see, around this year, price came and react around that psychological level. It sells off, but not too much. But in future, price might come to react to those levels. Let us look at the last example. Let's mark this level, 4,550. Let's use 50 as a psychological level. Okay, around 4,550. Around here it was a resistance. Then price grabbed it. It reacted as a support. Okay, price went up, then come around here, small support. Then price grab that area. Then you are waiting for in future price might come to react to that area. You can see around here price reacted around that level. Then there was small reaction around that level. That's what psychological levels are. So on my own draw, if you're starting, don't ever draw this many lines here. Just look for the next psychological levels. Example, if you drop to lower time frame like 1 hour, you can see that price is around 4,110. If the price now is on a uptrend, let's say the uptrend has started, we can participate that the market will reach at 4,150. Let us mark 4,150. 4,150. Okay. Our next psychological level will be around this 4,150. Okay. So don't draw too many lines. It will confuse you. Okay. And when using psychological levels, don't use lower time frames. Lower time frames will confuse you more and more. And then don't never enter a trade without a stop loss. If you have decided to enter buy around here, okay, make sure you put your stop loss so tighter. Okay. Always remember that protecting your capital is more important than winning one trade. Finishing off, I can say that support and resistance is the foundation of price action trading. Okay, you can master this before moving to complicated strategies. You can start with support and resistance. Practice this support and resistance every day, and you can see your trading idea will change or your trading win rate will change. See you to the next one. Make sure you subscribe. Bye, guys.